So let's say you actually have an expense that you don't have the money for, and you were thinking about taking out some credit in order to be able to cover that expense. I'm going to tell you if you should do that and the repercussions of it, as well as what you should use credit for coming up. Hey, if you missed my live credit score boost training, don't worry, I got you. If you click the boost training link below, you'll be able to take part in that live training. Now, this training is for those of you that work long, hard days, and then you come home and you struggle trying to figure out what you're supposed to be doing to fix your credit. You don't know what to pay off and what not to pay off, what to dispute and what not to dispute, and you definitely don't know what you did wrong to make your score drop instead of increase. Now, what you'll learn by taking part in the training is my account identification process, which has saved my customers on average about $5,000 by not paying off accounts that would actually drop your credit score. I'm also going to share with you some accounts that have guaranteed approval, so you don't have to worry about if you'll get approved or denied, and these same accounts have helped my clients on average gain about 30 to 80 points. I'm also going to share with you my dispute process that I use that has given me an average account removal rate of about 13 accounts over a 90-day period. And not to mention, those of you that stay all the way to the end of the training, you're going to get a free gift which will help you with your credit disputing process. So if you're tired of going around in circles with your credit trying to figure out what to do, go ahead and click the link below for the boost training. I'll see you there. Hey everybody, Will Frazier here, your credit expert, bringing you the credit tips you need to get your credit back on track, because what goes down must come up. And if you don't want your credit score to drop 300 points, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this. Okay, so this video is for those of you who may have a regular monthly expense that you currently don't have the money to pay for, and you are considering going and taking out a loan, a payday loan or a small loan, whatever it may be, a credit card, just to try to cover that expense. And those of you that see stuff that you like on the retail shelf and then you decide to use credit for that, or you're considering using credit for that item that you may not have the cash for now, you can also listen to this video as well. And as I mentioned in the intro, I'm also going to tell you guys what you actually should be taking out credit or using it for versus, what you actually should not use it for and why you shouldn't. And I can just simply tell you that using credit for expenses that you don't have the money for, of course, is not a good idea, but there is one instance or maybe two instances that you can actually use it for that are good. So first off, of course, you don't want to use it for expenses, because basically if you didn't have the money to, let's say, pay your car note or maybe some other big expense that you have on a monthly basis, if you don't have the money for it and then all of a sudden you take out a loan for it, the problem that you're creating for yourself is that basically this is a regular monthly expense that you have. You didn't have the money for it this month, so you take out the loan. Yes, you're actually able to pay it this month, but after you've paid it for this month, now the following month you have to pay that same thing again, and also you now have a payment on that loan that you took out to try to pay it. So now you're in double trouble basically. So unless something has changed as far as your income going up or you have money coming in from somewhere else this next month, then you are probably not going to be able to pay both of those expenses, and more than likely with the loan there's going to be a constant extra expense that you're going to have to pay until you pay that loan off. So unless there has been a significant change in your income that will help you cover both of these things, then of course it's not a good idea to do it, and that can cause trouble. This is why most people that take out payday loans end up consistently having to go back to take out the payday loan, because yes, you got some extra money that you were able to cover some things, but then when you have to pay back both, now you don't have enough money to cover both, so you have to take out the loan again just to be able to cover everything. And then you consistently get into this cycle where you are having to get the payday loan over again and over again. And just as a little quick tip to get out of a payday loan, what you'll want to do if you have been stuck in that cycle is you want to make sure that you take out less each time you go back to re-get that loan. And only if you have to keep getting it, take out less each time you get it, just a little bit less, so that you can get the amount that you owe down, and then you can be able to eventually eliminate it completely, because you weren't taking out the whole amount. If you have to make things stretch in your household until you can get that all the way down by not taking out as much as you needed, then that is going to be worth it to get out of that cycle and not have to consistently pay on that payday loan. Okay, so the main thing that you would want to take out a loan for or to use credit for would be to use a loan or credit for some type of investment. Now, investments come in many shapes and forms, but just for example, one of the types of investments that you could try to use credit for would be for personal or self-development. Now, when I say personal or self-development, that is you investing money using credit for something that is going to actually help develop a skill. Like if you wanted to go and take a class that would teach you something that would help you to generate more income, that would be something personal development wise. If you wanted to go to a coaching or a class that is going to teach you how to become more efficient or more productive as a person, or something that's going to help you be able to get a higher level in your current career, all of those types of investments are things that most people overlook. But if you really look at it, you're taking out a loan just so that you can be able to get a skill that can help bring more money into your household. And the thinking behind this is you want to be investing money or credit into things that are going to give you an ROI, which is a return on investment. Whenever you use credit for expenses, the only thing you're doing is adding an extra expense, usually on top of another expense, or give you opportunities to make more income. And of course, using it to invest in a business is another reason that you would take out a loan or something like that. But using credit to start a business is a different argument, and there are different factors that go into it based on what you're trying to do in business. But it can be beneficial, and in some instances, you may not want to use it for that in regards to starting up a business. Another reason that you might want to use a loan or credit would be to invest in an opportunity that might be about to pass you by. Let's say, for instance, there's a house on the market and it's probably a really good deal. You can really see a good return on investment from that house, but you may not have the money saved up for it. And if you have access to go and get a loan or some type of credit to purchase the home and do what you need to do to it to sell it, then that might be an opportunity that you might want to jump on. So you need to take out a loan versus trying to save up the money, because if you don't have the money saved already, then that would mean you would have to wait until you save up that amount of money, and by the time you do that, the opportunity may be gone. And this could have been the investment of the lifetime that could have changed your whole life, brought a whole lot of money into your household, and allowed you to start generating more wealth from there. Also, it may be some type of self-development program or something like that that's on sale, and you can get a return on investment from a coaching or a self-development class or some type of training. And while it's on sale, it might be an opportunity for you to actually save money on it. And if you take out credit for that, you might be actually able to save some money on something to help bring more income to you. And of course, you would want to weigh the factors of how soon you may think you would see a return on it, because of course with credit there are interest rates. So you want to make sure that you're not paying so much extra in interest that the savings doesn't actually benefit you. And also, while you're talking about investing in stuff that's going to give you a return on investment, don't forget also that investing in your credit, if it's not already where it needs to be, then that can be an opportunity for you to actually invest, increase your credit score, lower your interest rates on things that you're currently paying, which brings more money into your household. And then of course you may have access to more capital to do more things as far as personal development or getting new skills. And now we're going to talk about the only time that you would actually want to use credit in regards to your expenses and how it can benefit you. So one way is going to be if you're trying to build credit. So if you're at the beginning stages of trying to build up your credit and you're using that credit card to actually, pay for little things like gas or food, or maybe one of your smaller bills like your light bill, and you're just using that so that you can actually put something on your credit card, build up credit with it, and that's the basis behind why you're using it for expenses, then that is a good thing to do. Of course, you want to take into consideration how much you're utilizing out of your credit limit, because having a low utilization will also help you in regards to your credit. But yes, that is one time that you would actually use your credit card for expenses, because you're trying to build up credit. Now, the second reason that you would actually use credit for expenses would be you've already built up credit and you have a credit card with, let's say, an extremely high limit, maybe $10,000, $20,000, something like that. And now you have the ability to earn points on this particular credit card or whatever the credit card is. And you can actually put your bills, your monthly bills, set them to come off of your credit card. Now, while you have your monthly bills that you can put on your credit card set to come out off of your credit card, you're also being mindful that your bills won't add up to so much where you have an extremely high credit utilization on that credit card, which is why you want a credit card with a higher limit. And what you're doing by doing this is you're accumulating points because you have a whole bunch of items coming off of the credit card. You know, you want to make sure that you have a credit card that does give you points for the particular expenses that are coming off the card. You know, some credit cards, they give you points for groceries or gas and not necessarily a certain extra amount for regular bills that are coming off there. But just make sure you have a credit card that you get some type of points just for the dollar amounts that you spend. And in doing this, you are actually using your credit card wisely because you're keeping a low utilization and you're paying on time, and you're also building up points that you can use for other things like gift cards when it's time to, you know, give somebody a gift, or maybe to catch a flight or to book a hotel. You're going to be accumulating points and building up your credit at the same time, so it can be a win-win situation for you. And of course, even if it does go beyond a reasonable utilization based on the amount of expenses that you have coming off this credit card, of course you want to make sure that you are always paying off your credit card balances or paying down your credit card balances to a reasonable percentage by the time the statement is generated, because the statement is what's going to determine what's on your credit report, which will ultimately affect your credit score. So hopefully this gave you some clarity on how you would actually want to use credit in regards to your expenses, when you should and when you shouldn't. If you have any questions, or if you didn't agree with anything that I mentioned, or if you knew of a better time to use credit for expenses, then please comment those things in the comments. Thank you for sticking around to the end of the video. I'll see you guys next time.